This, I cannot overestimate how big of a deal it is that Harvard bought over $100 million worth of Bitcoin exposure. This is long-term capital preservation. The magnitude of what this means for both Bitcoin and all of our future is profound. This is absolutely a new monetary era. The amount of capital that has to flow into Bitcoin and find a new home is profound. Clearly, the plan is run it hot. Run it hot, debase the dollar, growth, 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 growth. We're going to try and win the AI race, and we're going to pump liquidity like no one's business. And my prediction this cycle of a $250,000 to $1 million Bitcoin remains the same.
The U.S. is quietly rewriting the rules for digital assets, and it could reshape the allocation of long-term wealth. Since Donald Trump's re-election, Washington has made moves to embrace cryptocurrency. New laws and executive orders are pushing the U.S. toward becoming a leader in digital asset innovation. The latest development came on Thursday when Trump announced that he would sign an executive order expanding the use of cryptocurrencies and alternative assets in retirement plans. Jack Mallers, founder and CEO of Zap, Strike's parent company, calls this a liquidity escape valve for long-term capital. Traditional bonds and real estate are underperforming, putting pressure on pensions, endowments, and municipal funds. By allowing Bitcoin and gold in 401ks, the government is directing capital into assets that can retain their value over time. Mallers says this isn't speculation anymore. It's structural. Policy and institutional adoption are signaling a new era in how long-term wealth is allocated. July alone was a winning month for ETFs, which saw $5 billion and $6 billion in inflows out of a total of $55 billion of net new money into ETFs. Even Harvard University's endowment is on board, holding $116.66 million in IBIT shares during Q2 2025, according to SEC filings. Massive liquidity injections, driven by government policy and growth initiatives, favor Bitcoin, Mallers adds. The prediction is that this cycle could push BTC to anywhere from $250,000 to $1 million, especially as new stimulus and liquidity measures enter the market. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention to help us grow. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
So the point is, the government is going to support Bitcoin as a liquidity escape valve. Trump allowing Bitcoin and gold into 401ks is a direct effort to try and save the portfolios that are trying to sustain capital for the long term, that have a bunch of garbage in it, a bunch of bonds, a bunch of commercial real estate. Now, here's the punchline. Literally, right after Trump signs this executive order. Now, obviously, Harvard could have purchased the Bitcoin a long time ago. It was disclosed recently. I'm not saying this was a direct reaction to Trump, but this was the biggest punchline I'd seen. It was like, okay, I'm living in a city that's literally eating itself. Our pensions own a bunch of crap because they own a bunch of commercial real estate that's marked down 85, 90%, and they own a bunch of bonds that are down 5 years in a row. And the fact that the pensions are in trouble makes the city in trouble, and the fact that the city's in trouble, the pensions are in trouble, and they're finding more money to give to the pensions to buy more dog shit. And here's the punchline, guys. What's the way out? What's the only way out? Let's go back to this. It's step 3 is the problem. The money they have is losing value. Listen, you cannot get out of this if you keep buying bonds. Like, the bonds are dead. The 60-40 portfolio is dead. These endowments, these pensions, these sovereigns, they have to start owning something else. This, I cannot overestimate how big of a deal it is that Harvard bought over $100 million worth of Bitcoin exposure. This is long-term capital preservation. This is the creme de la creme for long-duration bonds, for commercial real estate, for a bunch of bullshit legacy fiat crap. That's the Harvard endowment. That's the Chicago pensions. That's a bunch of the biggest sovereigns in the world. They can't live on bonds anymore. The largest cities in America are eroding. They're eating itself. 5 straight years of bond losses. Commercial real estate marked down 85%. To me, this was the shot heard round the world. Trump opening up 401ks to Bitcoin and gold exposure is massive. It is a direct attempt to save these savings accounts in this country. You are not going to win and you are not going to survive owning bonds and stocks. The 60-40 portfolio is dead. Absolutely dead. You have to find room for Bitcoin. And even Harvard agrees. I liked this tweet. In 2018, Harvard says Bitcoin is more likely to hit $100 than 100K. In 2025, Harvard buys over $100 million worth of Bitcoin at over 100K. Everyone gets Bitcoin at the price they deserve. This is right here. You could put this on a t-shirt. Stay humble and stack sats. But this is it, guys. This is it. The 60-40 portfolio is officially dead. The United States of America is literally siphoning Bitcoin into the 401k of Americans. Pensions, endowments, sovereign wealth funds are buying Bitcoin because you cannot sustain and survive on bonds. You cannot sustain and survive on a portfolio basket index of stocks. It's dead. And the magnitude of what this means for both Bitcoin and all of our future is profound. This is absolutely a new monetary era. The amount of capital that has to flow into Bitcoin and find a new home is profound. And this is no longer speculative. On this show, I spend months, I really think so. If I ran a pension, if I were in charge of funding teachers in Chicago, but now we're living it. That's an executive order from the President of the United States. That is the most prestigious university, not only in America, in the world, that has $100 million+ Bitcoin position. COVID was $3 trillion worth of liquidity, and Bitcoin went from $3,000 to $70,000. So Bitcoin more than 20x'd in that time period. So again, liquidity, dollar debasement, it's very good for assets. Bitcoin has been the liquidity sponge. It's been the best expression of currency debasement. Any form of liquidity like this is going to be explosive for Bitcoin. We're already seeing it start to sniff it out. It'll feel it in a real way when this stuff becomes real. And so this is just further confirmation that the notion that we were going to have some form of austerity where Trump and Elon were going to cut the government spending because the United States was just like a giant startup. And if Elon can fix Twitter, then he can fix the United States government. And we were going to have austerity and, Wall Street was going to face pain to the benefit of Main Street. Yeah, that was never going to be true. That's a load of bullshit. And clearly the plan is run it hot, debase the dollar, growth. We're going to try and win the AI race and we're going to pump liquidity like no one's business. And my prediction this cycle of a $250,000 to $1 million Bitcoin remains the same. So, on this show, didn't want to let this news cycle pass us by here. Fannie and Freddie going public as soon as November. That's a huge deal. That's a COVID level of liquidity.
The $116 million Bitcoin investment shows that even the most traditional institutions are taking the asset seriously. For Harvard, this is the most significant public exposure to crypto they've ever reported, but it's not their first foray. In 2024, Emory University announced that it had acquired 2.7 million shares of the Grayscale Bitcoin Trust, valued at over $15 million at the time. Jack Mallers says Harvard's move is a landmark. This isn't a hedge fund chasing short-term trends. It's a top-tier endowment focused on preserving wealth over decades. Their confidence in Bitcoin's long-term value sends a signal. If pensions, endowments, and sovereign funds start moving even a small portion of their holdings from underperforming long-duration bonds into Bitcoin, the impact on the market could be massive. Emory University reported $15.8 million worth of BTC, the first endowment to report a Bitcoin ETF position. With that, every institution type is now represented in the BTC ETF 13FS, an insane feat for a category less than a year old, akin to winning all 4 tennis Grand Slams before your 16th birthday. Let's get back to the interview.
This is Bitcoin and gold risk-adjusted returns. Look at all of this crap over here. Look at this. Long-term treasuries. That's what's funding my police workforce while I live in the murder capital of America. What the fuck? Why is that our savings account? Look at this crap. Look at here. Long-term treasuries, aggregate bonds, U.S. real estate. Sweet. Yes. Now teach my children how to become adults and protect me from crime. Unbelievable. Meanwhile, look at the only participant in the top right, the king, lion of the jungle. And here's the thing, guys. People don't want to admit it. Money naturally competes. It does. It's true. There is no second best. There's no such thing. And I've seen people reclip this. I don't know when I did this interview, but I've seen some reclippings of me saying this quote, and so I'll repeat it. When you understand Bitcoin, it's not 1% of your portfolio. I can't stand when people say, no, I totally get Bitcoin, and that's why I made a 1% allocation. It's like, excuse you? So let me get this straight. You figured out that Bitcoin is the best money in human history to have ever existed, and you decided to allocate 1% of your time and energy, your effort, your labor, your future. Either you're an idiot or you're a liar, because you either don't understand Bitcoin and you're lying that you've spent the time that you do, or you're an idiot. And when you found the winner, when you found the solution, you took 1%. Why would I allocate 99% to the loser? Explain that to me, smart man. There is one winner. I don't know how else to show this in visual form. There is one thing in the top right, and that's how money competes. It's highly competitive. What's the best way for me to persist my time and energy? Period. And here's the deal. When I say the 60-40 portfolio is dead, I'm not just talking about bonds, and we've talked a lot about this on this show. Stocks are a scam. Equities have been a scam. The idea that they've been performant is just because we've been measuring in dollars. If you measured in gold, we've already lived through a Great Depression level of performance in the stock market. Harvard buying Bitcoin was a seminal moment for this asset class. I'm telling you guys, that is the blue chip endowment. That is the blue chip, these capital allocators. Because here's the thing, guys. They don't buy risk. They don't want to take risk. They don't want to bet on technology trends. They're looking to sustain value. They're looking to save for 50 years. And the fact that Bitcoin got that vote of confidence is a huge deal, because I'm telling you, all these pensions, all these endowments, all these sovereigns are getting murdered in these long duration bonds that they're holding. Murdered. And if they start rotating even a fraction into Bitcoin, it's going to be a massive deal, a massive, massive deal.
A quiet revolution is unfolding in the U.S. financial landscape, where digital assets are moving from niche experiments to core components of long-term investment strategies. The inclusion of Bitcoin and gold in retirement accounts signals a structural shift, directing capital away from traditional bonds and real estate toward assets that can preserve value amid uncertainty. Institutional moves, from top university endowments to municipal funds, reinforce the legitimacy of cryptocurrency as a wealth preservation tool. With policy, liquidity, and market adoption aligning, the trajectory for Bitcoin could see unprecedented highs, reshaping the future of portfolio allocation. Could the growing integration of digital assets into mainstream retirement and institutional portfolios redefine the direction of global capital flows over the next decade? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.